Remember, if you have consistent cash flow, can handle some additional expenses, and may want to bring investors in one day, an S corporation might be a good entity choice for you. But if you want to seriously consider it, look out for the signs. Does your business have any debt? Could you use some access to credit, like a loan, a line of credit, or credit card? Have you encountered any lawsuits? As your business takes on liabilities, it's a smart move to make your business a separate legal entity to protect your personal assets. If your company is raking in profits, obviously, this is a great problem to have. But as your profits grow, so does your tax burden. S Corps have multiple tax advantages that help you decrease the amount of your earnings that are subject to taxation. Talk to an accountant to learn more. If you're just a sole proprietor, it's just you. But if you're an S corporation, you're allowed to bring on up to 100 shareholders. So get your pitch deck ready, but actually become an S Corp first.
Oh, you're in the mural?
I am. So, is your mind cleared yet?
I don't know. An S Corp sounds super enticing, but I think I'm just going to stick to the path I'm on, though. Thanks for all your help.
Did I mention the benefits?
God, benefits?
You may have heard that corporations are subject to double taxation. That means the corporation itself pays tax on its earnings, but its shareholders also pay taxes on the earnings distributed to them, commonly known as dividends. The great thing about an S Corp is that it avoids this double taxation. Only the owner and shareholders of the S Corp pay tax on the earnings. And you still get the best feature, limited liability. When you organize as an S corporation, as the owner, you must pay yourself a reasonable salary. At first, this may seem like a drag because you will have to pay payroll taxes, Social Security and Medicare taxes, both as an employer and as an employee. But the good news is that you will avoid paying the 15.3% self-employment tax on your earnings as a sole proprietor or LLC. To minimize your tax liability, S Corp owners can choose to take a smaller salary in addition to distributions of company profits, which are not subject to any employment taxes. However, if you try avoiding too much employment tax, for example, your reasonable salary is too small compared to your total earnings, you might attract unwanted attention from the IRS. Definitely talk to an accountant to help figure out the right balance for you. Remember just a minute ago when I said that an S Corp allows you to have up to 100 shareholders? Maybe it goes without saying, but by allowing others to invest money in your business, this will give you the opportunity to grow your business in ways that otherwise might not be possible. Likewise, forming an S Corp means you'll have a leg up with an established board of directors and officers to steward your company as it grows.
You know what? I'm sold. I'm going to switch my business to an S Corp. How do I do that?
Great question. First,
Before you tell me, are you going to change all those signs back? I think some of them were for safety.
Oh, right. Good point. I'll be right back. I'll tell you about how to switch to an S Corp in the next session.
I thought she would just, snap her fingers, but all right.